Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host Nina Mishra. My guest today is Joe Foster, Portfolio Manager and Strategist for Gold at VanEck. VanEck is a leader in gold investing. They introduced the first gold equity mutual fund, the VanEck International Investors Gold Fund, back in 1968. And in fact, Joe has been managing that fund since 1998. They also offer 3 gold and gold miners ETFs. Joe, welcome and thanks so much for joining us today.
Thanks. Good to be here.
Okay, so let's start with gold's performance. Gold prices have surged in June, thanks mainly to investors' search for safer assets amid rising market uncertainty and geopolitical tensions. Now, it is down a little bit today because of risk-on sentiment in the market after the G20 summit. But what are your thoughts on gold's rally so far, and can the rally continue?
Well, I think we're seeing a turning point, not just for gold, but for many markets around the shift in central bank policies that we saw over the last couple of weeks. We have expectations that the ECB could cut rates later in the year.
Right.
Also, the Fed is now expected to cut rates later in the year. So we've seen interest rates falling fairly dramatically. The dollar has fallen below its trend line, and we've seen gold breaking out. So I think there's a shift in sentiment where investors are becoming more concerned about the risk to the financial system, and I think that's going to drive gold higher in the near term as well as possibly in the longer term.
Okay, and while gold prices have done very well over the past month or so, gold miners have significantly outperformed the metal. The VanEck Vectors Gold Miners ETFs, ticker GDX, and the VanEck Vectors Junior Gold Miners ETF, ticker GDXJ. They have both surged about 23% in June, and these are the 2 biggest funds in this space. So, of course, higher gold prices are a major tailwind for producers, and gold miners are seen as high beta plays on the price of gold. So, what do you think about gold miners? Can they continue to outperform the metal? What are your thoughts on their rally going forward?
Yeah, as you sort of mentioned, the miners have leverage to gold. They have high beta exposure to gold. So a given percentage change in the gold price translates to a much higher percentage change in their cash flow and their earnings. So it's normal for the gold miners to outperform gold in a rising market. And if you look historically, the beta has been about 2 times the gold price performance. So we see the current performance in June is typical for these gold miners when gold is moving higher. Another factor is that the miners are undervalued, so they've been trading at a discount for quite some time now. There hasn't been much interest in the gold sector, so now that more interest is coming back and investors are starting to worry more about risk, I expect that valuation gap to eventually close. So I think going forward, if this positive gold price continues, we'll see these miners not only getting the normal leverage they get from rising gold prices, but also they will close that valuation gap, which will enable sort of an enhanced performance due to the valuation gap coming closed.
Okay, very interesting. So this space, the gold mining space, had seen a spate of mergers and acquisition activity in the past few months. Earlier this year, Newmont bought Gold Corp, which created the world's largest gold miner. And last fall, Barrick had acquired Randgold. So what are your thoughts on mergers activity in this space? Do you expect further consolidation in the sector? And is it good for the sector?
Well, there's always a M&A going on in the gold sector. There always has been, and there always will be at some level. I think the Newmont and the Barrick mergers that we saw earlier this year and late last year, I think they're more one-off occurrences. Rarely do we see mega mergers like this in the gold sector, and I think they were both sort of unique situations. Going forward, we typically get larger companies looking to acquire smaller companies for growth, and I think we'll continue to see that. If this positive gold market continues and valuations improve across the sector, then I think we will see increase in M&A if and when those valuations improve. Typically, though, when you're in a low valuation market like we have been, M&A tends to be subdued. So I think it depends a lot on where the gold price goes from here as to whether we see an increase in M&A or not.
Okay. So tell us a little bit about some of your favorite gold mining stocks, since you have been tracking this sector for a long time and you are an expert in the area.
Well, when we look at the majors, I guess the three that stand out is Agnico, Barrick, and Newmont. We like the mergers, Barrick Randgold merger, also the Newmont Gold Corp merger. I think both of those mergers create stronger companies, more formidable companies. So we expect good things out of both of those companies, Barrick and Newmont, as they move to consolidate their mergers and rationalize their properties. Agnico has been a sort of a cornerstone asset for the fund for many years. Agnico's they've got growth. They're very good with value creation. They hit their targets, meet or beat expectations consistently. So Agnico is just a solid company that we've had in the portfolio for a long time, and we're happy to keep it there. If we look at the mid-tier stocks, more safer, I guess, jurisdictions, we've got Kirkland Lake. They've got a mine in Canada and another mine in Australia. They are focused on narrow, high-grade underground veins. They do it extremely well, and they're expanding both of their key properties in Canada and Australia. They're busy drilling and expanding some very exciting discoveries in both areas. So Kirkland's our top pick. We also like B2 Gold. They've done a fantastic job of developing their Fekola mine in Mali. B2 is there's probably a little more geopolitical risk in the company as they're mining in West Africa and the Philippines, other areas, but they've managed it extremely well. And this is another company that hits their targets, meets or beats expectations consistently. And then I guess my third one on the mid-tier side would be Evolution Mining. This is an Australian company with Australian assets, mid-tier, just a very solid mid-tier producer out of Australia, and they've assembled a great portfolio of properties, and they're new to the mid-tier space. As of several years ago, there's a burgeoning mid-tier sector in Australia, and we think Evolution is the best managed company in that area.
Okay, excellent. So tell us what investors need to know about investing in gold miners and junior gold miners. They have, of course, done very well recently with the surge in the price of gold. But if we look at the longer-term performance, it has generally been disappointing. And these are high-risk, high-volatility companies. So tell us what investors need to know.
Well, mining is a risky business. You're dealing with operating risk, geopolitical risk, environmental risk. There's quite, it's a risky sector to invest in.
Mm-hmm.
We always recommend that investors use a portfolio approach, not so much investing in a single gold mining company, but invest in a handful or invest in a fund like ours. I mean, my job is to mitigate those risks, and through our research property, that's what we do. We look at all the aspects of the companies and try to find the companies that are managing their risks and creating value for us. So I think given the characteristics of the sector, I think your average investor is probably better off investing in a fund to mitigate those risks versus investing in individual gold mining stocks.
I agree with you. A diversified exposure to this sector makes a lot of sense because of the inherent risks involved. Now, I wanted to switch gears a little bit and talk about the role of gold in a diversified portfolio. And I usually tell investors I recommend having about 5 to 7% exposure to gold, mainly because of its low correlation with other asset classes. What are your thoughts on the role of gold in a portfolio?
Well, I agree completely with diversification. Gold and gold stocks have little or no correlation with other more mainstream assets. So you can put a small amount of gold or gold stocks in a portfolio, and because they don't correlate, they can smooth out your performance and give you better risk-adjusted returns over time. I don't think anything less than 5% is not going to make much of a difference. At the same time, gold or gold stocks should not be the centerpiece of your portfolio. So I recommend between 5 and 10%, or maybe a little more, depending on what you're comfortable with and what your outlook is. The second role of gold, though, in addition to being a diversifier, is that it's obviously a hedge against financial risk. So global systemic financial risk is what really drives the gold market. And if we are going into a period of increasing risks, which I believe, and I think many people, the Fed is looking to cut rates, so I think they're seeing risks on the horizon. Then you might want to have the upper end of the range for your allocation of gold or gold stocks.
So, gold has done pretty well of late, but Bitcoin has surged and has significantly outperformed gold. And Bitcoin is obviously much more volatile than gold. And we have seen a lot of comparison between gold and Bitcoin of late. And in fact, some cryptocurrency backers have called Bitcoin Gold 2.0 and also digital gold. VanEck has filed for a Bitcoin ETF, which has been delayed by the SEC. And I know you cannot comment on that filing, so I'm not going to ask you about that. But I was interested in your thoughts on the Bitcoin versus gold debate. Do you think Bitcoin is gold 2.0, and is Bitcoin's rally positive for gold?
I think gold and Bitcoin are two almost completely different investment vehicles. Gold is a safe haven. It's been a safe haven investment for millennia, going back, in human history. Bitcoin is I regard Bitcoin as a cross between a currency and a tech stock. I don't think it's a store of value like gold. It's extremely volatile. It remains to be seen where it ends up. It's got challenges with security, challenges with the regulators, and it's just not clear what Bitcoin will be in 5 or 10 years. But I don't think it will be ever replace gold. it's ironic, but Bitcoin, it's not a coin at all. They like to show it as a coin in photos, but Bitcoin is a pile of electrons, and it is not a coin. It can't be formed into a coin like gold. It's not a tangible asset like gold. So there's many differences. So I don't think the rally in Bitcoin has anything to do with the current rally that we've seen in gold.
Yes, I treat Bitcoin more as a speculative investment, so maybe about 0.5 to 1% of your portfolio if you are comfortable with the risks involved. And I also remind investors that as far as Bitcoin is concerned, its value can go to zero literally, whereas gold has some intrinsic values. There are so many central banks which have been increasing their holdings in gold. They have their reserves allocated to gold. So gold's value cannot go to zero. Any other thing, anything else investors need to know about investing in gold and gold miners ETFs and funds?
Well, I guess maybe one last thing we didn't touch on. Another reason that this breakout in gold is significant is that gold has been trading in a range for 6 years now. It's been trading around the $1,200-$1,300 an ounce level, and it's sort of been more or less trapped in this range. I think it's been supported by geopolitical risk and also buying from the central banks. But nonetheless, it's formed this huge, very long 6-year base, and it's finally broken out of that base. So I can't overstate the significance of that. So it looks like at a minimum, gold is probably going to find a new higher trading range. It's going to form a new trend now, and we don't know what that trend's going to look like. But I think it will find a new higher trading range. And if we see more risks coming to the financial system going forward, then I think we could be seeing the beginnings of a new bull market for gold.
Excellent thoughts. That's all we have time for today. Joe, thanks again for joining us.
All right. Thank you.
Thanks for listening. If you want to learn more about these funds, please visit venec.com. Make sure to be on the lookout for the next edition of ETF Spotlight, and also make sure to subscribe. If you have any comments or questions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.